Hello, fellow wealth seekers! Picture this. You follow an American finance creator and they tell you just buy VU, just buy SPY, and you decide to give it a go. But guess what? You're legally blocked. You cannot, as a European, buy US domiciled ETFs. But that is actually the good news, because today I'm gonna tell you about the European upgrades. ETFs that are tax efficient and specific for our systems that allow you to invest in the exact same companies. I'm going to share the exact tickers I buy and the tool I use to even model my portfolio for free. But first, a foreword. In the US, you usually get paid yearly dividends. That triggers a tax event. You pay the tax and reinvest what's left. That is inefficient. In Europe, we have accumulating ETFs. Those are amazing because they are able to reinvest the dividend without ever getting in your pocket or trigger a sales tax. Meaning you have much less manual work and you often defer the tax. Why do I say often? Because in some cases you have regulations such as the prepayment tax in Germany, where you do have to pay a part of the tax. Nevertheless, it is at a lower rate and this gets credited to you when the final sale occurs. So it is generally more efficient still. Now, the strategy. Simply put, I buy the world. I want a fund that invests and tracks across the whole globe. Meaning I'm covered should the US crash and China rise, or tech fall and healthcare boom. Now, the specific ETFs. Recommendation number 1, Vanguard All World. You own a piece of 4,000 companies across the world. Nearly every publicly listed company, developed and emerging markets. Pros, total simplicity, peace of mind. Cons, slightly higher fees, a base fee of 0.22%. But if you ask me, worth the comfort. Recommendation number 2, MSCI World. Slightly lower fees at 0.2%. Good exposure to developed markets. The catch? It excludes emerging markets, such as China, India, or Brazil. So you might want to integrate that. Recommendation number 3. For the US bulls that want to bet purely on North America, I recommend you VWCE. This is VU, the S&P 500, but accumulating for Europeans. Pros, extremely cheap, 0.07% fees. Cons, you have no other exposure. You don't track Europe, you don't track Asia, and if the dollar crashes, you hurt. But don't just trust a guy on YouTube. Verify it yourself. First, check the tax regulations for buying ETFs in your country. Secondly, go to justetf.com, a fantastic tool that allows you to search for any of the trackers I gave you and millions more, and even use their strategy builder function to understand how a potential portfolio would have performed in the past with the right weights. Go and verify yourself.
And you know what? I also have a small measurable goal for this week. I would like to add 50 more subscribers, and if you subscribe and comment, you might be winning one of my favorite money books of all time. More details below.
Before you buy anything, check it there. Now, some common mistakes to avoid. Number 1, buying in dollars. Always buy the euro traded version. For example, on Xetra. It saves you a very annoying currency conversion fee that your broker charges. Number 2, buying the distributing version. Always look for AC or accumulating in the name of the ETFs. Mistake number 3, falling for the home bias. Don't buy a DAX ETF simply because you're based in Germany. That is only 2% of the global economy. Do not put all your future on 2%. Now, go and do your homework. Check Just ETF, type VWCE, and look at all the companies you are about to own with a few clicks. In the next video, I'm gonna show you where to buy all of those exactly. We're gonna look at all the major brokers and understand which one is right to secure your own life savings. Till the next lab session, European Wealth Lab out.